Welcome back. We have Manisha Gupta joining in now to give us a sense of which way commodities are headed. Manisha, good morning.
Morning, and I'm looking at metals as a sector because we've seen positive cues continue for this one. Remember, for the last couple of weeks now, we've seen gold prices hold around that $2,000 per barrel per ounce mark, and we have seen most of the other metals also post week-on-week positive rates, and that is after the Fed has eased the rate cycle. The last two meetings have not seen any rate changes, and then we've seen stimulus come in from China as well to support the economy. The dollar index and the treasuries also have come off their highs that we saw recently. That in turn also has been supportive for the dollar-denominated commodities here. Markets also are looking at the US data non-farm payroll that came in on Friday, where we saw 150,000 jobs added versus the estimate of 180,000. And that leads to belief, and that also shows up in the CME Fed Watch, which says that there is a 95% chance that the December meeting will also go uneventful, as in there wouldn't be another rate hike. And that is what the markets really seem to be feeling in right now. If you look at the last 1 week, then we have seen almost all metal prices trade in the positive, anywhere between 1.5% to 3.5% on the higher side. The best of the gains clearly coming in for steel prices, but zinc, aluminum also gaining 2% in the previous 1 week there. This is even as we have seen on-ground Shanghai inventories actually gain in the last 1 week. So we are looking at 5 to 12% of a rise in inventories on a week-on-week basis. So actual on-ground demand is yet to come in, but the market's clearly playing it onto sentiment right now. Having said that, there's a lot of data coming in on this week as well. And the most important out of that is the Chinese numbers, where we have seen China trade data coming in and China inflation data that comes in on Thursday as well. Those are the gold prices, which have gained 7% in the month of October. There's a lot of safe haven buying that we saw into that month. But I also want to take you to the CFTC data, and that will show you the picture on how strong the demand clearly has been. So when you look at the longs, those gained up by 15,000. So we are standing at a net long position of nearly 1 lakh contracts when it comes to gold. These are all the longs there. When you come to shorts then, and we have seen a decline come in for this one. So there's a lot of short covering happening in gold as well. And we have seen those contracts decline by 3,500. So total shorts as of now stand at 14,000 versus longs of 1 lakh contracts. Clear cut support continuing in case of gold prices there.
Okay, thanks a lot for that. Let's slip into a quick break. On the other side of the break, Lata Venkatesh will catch up with Suresh Ganpati, the banking analyst from Macquarie Capital Securities, to discuss the Q2 performance of the banking and financial sector. Stay tuned.